So, Mr. Emmanuel, why did you decide to work with Imperium?
Well, I've known Leo for probably 5 or 6 years. I've been here to China with him probably 6 times. And it's been very impressed in terms of what he's built as a company since I've known him. And we have similar philosophies in terms of investments. And so I know Leo with Imperium is starting a multi-manager, manager of managers fund, and fund seeder, and how we've built a search engine, if you will, to find talented traders seems to be a very natural fit for his product.
Mr. James, the Brexit in 2016 stimulated fluctuations of mainstream currencies. In your opinion, which will be the most promising currency in long term?
Sure, that's a great question. The Brexit vote really changed things for Europe a lot and throughout the world. I think it ushered in an era of populism for countries that even has swept to the United States, where people are looking inward. And I think it'll be challenging for Europe to hold together with that vote and also with Italy's vote. So from that perspective, I think countries that have strong GDP to debt ratios will be places to look for long-term currency appreciation. And China could be a place like that. But for that to occur, China would have to open its debt markets and get more liquidity into the bond market and become a more liquid place. And until that happens, I think the United States could be a leader with currency into the future. So it's anybody's guess. It's challenging, and we're in unprecedented times. But I think the U.S. and China could be leaders in that.
All right, thank you. Mr. Jack, with the induction of Donald Trump next year, what do you think of the future development of American economy?
Well, there are going to be multiple effects, and they differ between the short term and the long term. So Mr. Trump has been pretty clear in what he wants to do. One thing he wants to do is to raise spending for the military. He wants to also spend a lot of money for infrastructure. The military spending the Republicans will support. The infrastructure, he'll get not all the Republican support, but he'll get a lot of Democratic support. So good chance that both of those things will go. He also wants to cut taxes, which is what the Republicans want to do. So short term, you're going to have a boost to the economy because you're going to be doing a lot of spending, the proverbial guns and butter. So the economy will probably grow. You'll get some consequences of that also, like higher interest rates and higher inflation, which will accompany that growth. The longer term effect, however, will be quite different. It will cause the deficit to grow. I mean, that seems almost unquestionable because simple arithmetic, you increase both social and military spending and you reduce taxes a lot. Simple arithmetic and simple economics will tell you that the deficits could grow very sharply, which is another reason why you will get longer term more inflation and higher interest rates, which is very bad for the bond market, and you're seeing that actually occur already. There is a fly in the ointment, though, to that whole prediction, and that is the trade side, because Trump has been actually very, very opposite the normal Republican view in that he's anti-trade. Now, almost all economists, conservative and liberal, would agree that that is a horrible thing, and certainly horrible for the U.S., horrible for China, horrible for everybody. So the Republicans a lot of Republicans probably won't support him on that, probably a lot of Democrats. So that's a closer call. But if he is successful in getting that, then that would be very negative, and that would offset some of the growth issues. And then it becomes much more complicated. Anyway, those are the cross currents that I see from his policies.
Mr. Emmanuel,
yes, sir.
The era of super low interest rate is coming to close. How will it impact the market?
Well, that's a very good question, and it has been a while where the rates have been low, and as the esteemed Jack Schwager mentioned earlier, the most immediate effect is going to be on the bond market. And more importantly, I think for investors that maybe had a lot of their wealth in fixed income products where they had that security, if you will, of bonds, they have to look elsewhere. They have to look elsewhere to not only protect their wealth, but perhaps make money in uncertain market conditions. So inflation is likely going to be a scenario that's going to happen. There's going to be perhaps more volatility, and investment products like CTAs or hedge funds or alternative investment managers that can make money in all types of market conditions, I think are something that that investors should consider.
創造你嘅黃金時代，帝國金融。